Everywhere you look, headlines are screaming about a huge wave of new apartments hitting the market. The common advice you're hearing? Stay away. It's oversupplied. A crash is coming. But what if the crowd is wrong? What if waiting is the most expensive mistake you can make? Hidden inside the very data that's scaring everyone off is proof of a powerful underlying demand that's creating a unique buying window in 2025. This isn't just a hunch. It's a market shift that separates panicked sellers from strategic buyers. And right now, the smart money is looking at numbers that most people are completely missing. In this video, I'm going to break down what's happening behind the headlines and show you the 3 critical, data-backed reasons why this supposed crisis is actually a once-in-a-decade opportunity for those looking to get ahead of the crowd. But before we get started, make sure to subscribe and hit that like button. All right, in all fairness, the panic isn't coming from nowhere. The market has seen a truly historic level of new construction. In 2024, a record-breaking number of new apartment units, well over 450,000, were delivered across the United States. That's a massive figure, and it understandably created pressure. You saw it in the news, with stories focused on rising vacancy rates and landlords in high-growth areas like the Sun Belt, offering concessions just to fill their brand new apartment buildings. Markets like Phoenix, Austin, and Charlotte, which were industry darlings just a few years ago, suddenly faced a glut of new inventory. In some of these hotspots, the total number of apartments grew by nearly 20% in just a 3-year window. When you combine that tidal wave of new supply with the high interest rates we've all been grappling with, it paints a pretty bleak picture. Transaction volumes slowed to a crawl. Financing got tougher, and a narrative of fear took hold. Most investors looked at this and saw a market drowning in supply. They saw short-term rent growth flatline and decided the smart move was to sit on the sidelines, clutching their cash, waiting for the storm to pass. They're waiting for the all-clear signal. But in investing, by the time the buy signal is completely obvious, the best opportunities are already long gone. The mistake isn't in seeing the new supply. It's in failing to see what's happening on the other side of the equation. Here's why sitting on the sidelines is the real risk. Think about it. The best buying opportunities don't happen when the market is booming and everyone feels confident. They happen during moments of dislocation and uncertainty, exactly like the one we're in now. While most investors are paralyzed by fear, they're missing 2 fundamental truths about the current market. First, the supply-driven panic is creating a pool of highly motivated sellers. Imagine developers who started projects back in 2021 and 2022. They planned their deals based on rock-bottom interest rates and wild rent growth projections that are no longer true. Now they're facing a completely different world. Their loans have become way more expensive, and all this new supply put a temporary cap on the sky-high rents they were banking on. Many of these owners are now feeling the squeeze. They need to either sell or risk losing their assets. This isn't a sign of a broken market. It's the result of overly optimistic deals meeting a more normal economic environment. For a savvy buyer with cash and stable financing, this means you can finally acquire high-quality buildings at prices that are far more sensible than anything we've seen in the last few years. Second, real estate is cyclical. The forces that created this supply boom are already reversing, and they're reversing fast. The same high interest rates and construction costs that are pressuring current owners have also made it nearly impossible for new projects to get off the ground. This isn't a guess. It's already showing up in the data. While everyone is staring at the wave of apartments delivering today, they're completely ignoring the supply drought that's just around the corner. And that brings us to the heart of this opportunity. This is where we look past the headlines and into the numbers that tell the real story. Here are the 3 key reasons why 2025 is shaping up to be an incredible buying window. Reason number 1, demand is quietly swallowing up the new supply. The biggest story being missed is that demand has remained incredibly strong. Despite the record number of new units, they are being absorbed at a remarkable pace. In fact, for 5 consecutive quarters leading into mid 2025, the demand for apartments has actually outpaced the number of new units being delivered. This isn't a fluke, it's driven by powerful forces. First, the cost of buying a home is still incredibly high, keeping a huge number of would-be buyers in the rental market for longer. This creates a massive, consistent base of demand for apartments. Second, the United States still has a structural housing shortage numbering in the millions. Even with the recent construction boom, we're years away from closing the gap. Because of this powerful underlying demand, national vacancy rates are expected to stabilize and finish 2025 at a healthy 4.9%. Strong renter demand is already absorbing a huge amount of new supply, especially in those same Sunbelt markets that saw the most construction. So while the headlines focus on supply, the data shows demand is quietly winning the race, creating a stable foundation for the market. Reason number 2, the supply wave is about to crash. This is the part of the cycle that today's buyers will benefit from for years. The same market forces that caused the building boom have now slammed on the brakes. Multifamily construction starts are falling dramatically. By mid-2025, starts were expected to be a staggering 74% below their 2021 peak. Think about what that means for just a second. It takes years to go from a plan to a finished building. The sharp decline in new projects starting now guarantees a significant shortage in 2026 and 2027. While some forecasts show a drop in starts of around 11% in 2025, they're expected to stabilize and begin a modest recovery in 2026. But by then, the damage will already be done. Investors who buy properties in 2025 will face dramatically less competition from new buildings in the years ahead. This future supply gap will give landlords major pricing power. After a period of moderation, rent growth is projected to accelerate into 2026. Forecasts call for national rent growth to hit about 2.6% in 2025, with even stronger growth expected in the following years. By investing now, you're positioning yourself to directly benefit from this predictable tightening of the market. All right, before we get into our final crucial point, if you're getting value from this analysis and want to stay ahead of the curve on real estate trends, take a second to subscribe to my weekly newsletter. I break down the data, not the drama, to help you make smarter investment decisions. The link is in the description below. Reason number 3, the return of smart deals and investor confidence. The mix of motivated sellers and a clear future outlook is finally thawing the frozen transaction market. After a major slowdown, investment sales are showing clear signs of life. The first quarter of 2025 saw a jump in sales volume of over 30% year over year, and total sales for the first half of the year are up significantly from 2024. This isn't just wishful thinking, it's capital finally coming off the sidelines. Private buyers and even large institutional players are re-entering the market. They see the pricing has adjusted to more reasonable levels, and they understand the coming supply crunch. They're taking advantage of this lingering uncertainty to make deals. This creates a perfect but limited window of opportunity. You have sellers who are still feeling the pressure from deals made in a different economic era, which means buyers can negotiate from a position of strength. At the same time, the broader market is beginning to recognize the positive long-term fundamentals, so you're not investing in a vacuum. This is the sweet spot, buying when assets are mispriced due to short-term fear just before the rest of the market catches on. There's a reason multifamily remains the most preferred asset class for commercial real estate investors in 2025. The underlying fundamentals are solid. So let's recap the real story. The headlines are obsessed with a historic wave of supply that is already being absorbed by incredibly resilient demand. Panicked investors are sitting on the sidelines, spooked by a problem that is already solving itself through a dramatic slowdown in new construction. This whole dynamic has created a pool of motivated sellers and reset property values to more attractive levels, just as the market is poised to tighten significantly in the coming years. This is what a true buying window looks like, and the opportunity strategic investors have been waiting for. It's a moment of temporary confusion, where the short-term story is completely different from the long-term data. While others are waiting for certainty, smart investors are acting on the numbers. The opportunity in 2025 isn't about ignoring the risks. It never is. It's about understanding them better than anyone else and recognizing the powerful forces already paving the way for future growth. If you want timely insights into the biggest trends shaping real estate, the multifamily market, and the broader economy, sign up for my weekly newsletter by clicking the link in the description below. If you found this video helpful, do me a favor and like, subscribe, and hit that little notification bell so you don't miss the next video. Your support really helps the channel out and gets the content in front of more people. I'd also love to hear your thoughts or any questions you might have, so drop them in the comments below. And if there is a real estate related topic you want me to dive into next, let me know there too. Thanks again for watching, and as always, I'll see you in the next one.